So we always pay attention to the Government Pension Investment Fund, which is the name of the Japanese pension, $1.5 trillion. Now, as you point out, it's the last quarter of last year, 2018, right. But still, it's pretty remarkable. You got $1.5 trillion, you didn't make any money.
Right, so the CIO pointing out that in the last quarter of last year, whether it's fixed income, whether it's currencies, whether it's equities, they could not manage to make money. And they pointed out to CalPERS that this was the first time this has ever happened. You would hope that it's the first time that it ever happened. You would hope that it's the last time it ever happens. But the fact of the matter is, we remember what happened in the fourth quarter of last year. Typically, stocks and bonds should have a negative correlation. You lose money in one, you make money in the other. That was not what we saw. We saw stocks and bonds falling in unison. Now, I will say, at least in the U.S., we have seen a change of pace, especially of late. If you look at two of the biggest exchange-traded funds as proxies, you've seen TLT and SPY actually move in opposite directions for 16 straight weeks. That's the longest streak.
So treasuries versus equities.
Exactly. Bonds versus stocks. Opposite directions, longest streak since 2012, pushing the negative correlation to the most negative since 2015. But still, for the pension fund, it's really difficult over in Japan because the majority of their assets are in Japanese stocks and bonds, and we have just seen a lot of pain.
We've got some big pension plans here, too, CalSTRS. So
right.
Do we know how they did the last quarter of last year?
So we don't have that data yet, but it's interesting because where this story came out of was actually a conversation between CalSTRS and between the Japanese Government Pension Investment Fund.